All right, so we have a very, very interesting week for those of you who have not heard or have been sort of out of any access to any news. The Greece held a referendum yesterday, their time, Sunday, and it was voted unanimously that they voted as a no, meaning that they did not want to accept the bailout conditions that effectively expired last week. So they voted like a 1 week late. Nevertheless, it was really more a display of acknowledgement of the government itself. Okay, so what does this mean to the euro? What does this mean for Greece? What does this mean for our markets? Okay, I'll try and decipher the information for you so that you have a bit of a better understanding. Essentially, what it basically means is that via the euro, Greece had been receiving some aid to assist them through their difficulties so that they could remain as part of the euro, and that's basically via the ECB. Now, effectively, Greece has rejected the conditions of the continuation bailout, which basically means they're saying, well, thank you for helping us, but we don't like the conditions of that help. So that is the message that the people spoke by voting no. Effectively today, at some point, it was known that I'm not sure how to pronounce it, Mr. Sapiris, basically came back to the ECB and said, all right, so the people have voted no, but that doesn't mean that we don't want to be part of this. All right, so what now is trying to happen is, when it's probably going to happen all throughout this week, is the ECB now has to make a decision whether they amend some of the conditions and then Greece can accept them and still remain as part of the euro, or whether this is it and Greece will be expelled from the euro and the Grexit terminology that has been coined, it comes to fruition. Most analysts at this particular point in time are 50-50. All right, so this is about as close as you can get to a 50-50 in terms of every other time. I think that most analysts didn't really believe that Greece was going to get kicked out. It is now a reality. Now, for the Greek economy, what does this basically mean? Effectively, the banks have been closed since last week. They're supposed to open today in about 2 hours' time. Not sure if that's going to happen. They predict that if they do, there's going to be a massive rush for ATMs, and basically Greece will run out of cash within 2 or 3 days. Now, that puts a lot of pressure on that government to come to an agreement with some conditions so that they can get assistance. Now, so it's in a little bit of turmoil at the moment. Needless to say, if you're trading the euro or anything euro, it's going to be a very, very volatile week. I did say last week, be careful, don't hold any positions open over the weekend. And today we opened with a 200-point gap on some of the euro pairs. All right. Now, that's what's happened. What turns out next is anybody's guess. In the long term, okay, it may be a benefit for the euro currency itself to not have Greece included in it. But in the short term effects, we could see the euro plummet to, some people are talking even as close as 105, maybe parity. We opened this morning at 109. We're bouncing around at just under the 110 mark. We'll have a look at some charts in a moment. So it could be a knee-jerk reaction until it all settles down and we all move back into sort of the realization that perhaps Greece not in the euro is a good thing. Now, had this happened, say, 12 months ago when the euro itself was in all upheaval and under pressure, it could have collapsed it straight away. At the moment, the euro is much, much stronger than it was 18 months ago, and the reality is now coming to light that yes, life after Greece is not going to be as bad. They only represent a small portion in terms of GDP of what the euro is all about. So those are the messages. Now, should it stay in? It will continue to weigh down a little bit on the euro, but the key things to look out for, because what could happen is that Greece survives and it makes it, and then the euro still drops down, and that could be a mixture of other countries such as say your your Italys or your Spains, if they give Greece special attention, those countries that have gone through this before or are there or thereabouts are going to say, hey, what about us? That could be the biggest issue for the euro. So it's very, very careful. They need to make this decision. This is genuinely why most analysts are saying that it's a 50-50. They could well and truly say, let's cut it loose and move on with life. Okay, so when I look at my charts, and you'll see, and we'll talk about it, half of me is thinking fundamentally at the moment because it's something that I cannot ignore, and I'm thinking also of the technicals. All right, the euro aside, Greece aside, it is the number one dominating topic, so much so that you've even probably heard it on your normal mainstream news, like your Channel 9 or your Channel 10 news. When that happens, it tells you that it's actually, it is a huge, huge topic. Okay, now in terms of news for this particular week and what we have on our radar is, just give me one moment while I get my pen up and running. The Aussie, of course, it's the first Tuesday of the month, which essentially means that the RBA announcement is due, and it's on tomorrow at 2:30 over here. So look, I don't think anybody's expecting any surprises over here. We're not really thinking that we're going to get another rate cut so soon. But nevertheless, just keep an eye on it. It should be a little bit of a non-event. That's what most people are thinking. We do have employment change figures for the Aussie later in the week, and there was something else. Where am I? Those are the two major pieces of news for the Aussie front. Now, there is a bit of USD data, and one thing that's going to affect the Aussie a lot this particular week, and it's already happened at the open this morning. We opened about 50 odd points lower. With the Greece situation, what that basically means, a lot of people that are holding euros who are concerned about their value of their euros are switching their euros to different currencies as a safe haven. A lot of money has gone towards Japanese yen, funny enough, and US dollars. So a lot of euros have exchanged for US and Japanese yen, which is making those two currencies a little bit of a safe haven. The down effect for the Aussie dollar, meaning the AUD USD, is that it's strengthened the US dollar, which basically weakens our rate. And the double whammy was that over the weekend, there was information on China, which was not very, very good. So the Aussie dollar is receiving it from both sides, from the US side, turning into safe haven, and from China, putting out bad data. Okay, so that's one of the main reasons that the Aussie dollar has tanked a little bit this morning, and we're threatening now. We've opened underneath 75, and it's going to really, really push. Okay, I think for this week, I can't ignore the Greece situation. It's affecting everything, all right? But the other currency that's going to be under the spotlight out of the ones that I feel are tradable is the Aussie USD, okay? So especially we got RBA tomorrow, we got employment change, we got the USD numbers later in the week, and we got the safe haven issue, okay? So that's my summary on the fundamentals. If you have any questions, type them in. I'll try my best to answer those. I hope that made sense. Let's bring up the charts and let's get started with our technicals. Okay, so we'll start off with the Aussie USD. I'm looking at a daily chart. Last week we established that we were in some kind of a floor there, and we were looking for a clean break below, and we marked out this whole region, and we got it on Friday. Now, this is a prime example of the difficulty and the psychological tension that you get when you're going to have to try and trade this. In theory, this is a clear sell entry. It doesn't come clearer than that. The problem is we opened all the way down here, and we're thinking, is it going to go any further? We've just come from there. Who's feeling that pressure? Can I just get a quick show of hands? Is it just me? I think that if I'm feeling it, there must be lots of other people that are feeling it as well. It's a natural reaction. Okay. All right. Great. Thank you for the ones that are responding. So in theory, we have an entry here. Okay. Now, if you don't want to take it, that's okay. Now, on the plus side, this gap is virtually already closed. I'm on a daily chart. I'll move down to a smaller time frame. It's virtually closed, which means the gap scenario is over, and we can trade this accordingly. Now, I actually really liked this trade. This one showed up on Thursday. Did anybody take that one? Now remember, from this movement, we already traded this one. We traded that one, and we got a good trade. If you took this one, you took another trade. Who took this? Let me just rub out my chart so that we can all see it. Who took that trade that is showing on my chart right now? It's a nice engulfing candle on the way down. Okay, great. Alan, Phil, Romy, Bijan. Great, well done. All right, for the ones that didn't, that's okay. What for the ones that didn't, but you spotted it, if you spotted the trade but did not take the trade, what I suggest is at the very least, take it in demo mode, all right? So that you can, because once you're in that trade, you'll look at the trade and you'll follow its behavior, all right? This is a bread and butter type trade that we take, so we should have got that one. Let me just measure out. So you would have had about 100 point stop, and it's got up to 170, so it's definitely made the 1-to-1, and you might still be in that pushing for the 2-to-1. Okay, so that one's done. Look, if you're okay, so I'm assuming there's a lot of people still in this trade, but for the ones that are not in the trade, the next opportunity that you're going to get for this one is we're going to wait for some kind of a pullback into this region here. Okay, if I get some kind of a pullback and I get another setup right there, you got to hit that trade. Okay, now I'm not saying it's not gonna work. It's gonna be a 100% trade because there's no such thing, but it's a great setup. Okay, one of the advantages of trading inside the congestion as soon as the trend starts to show is that when you break through, you get the maximum rewards. So if you took this trade here, you would have been sitting tight around here on Thursday night, and then Friday opened, and then it just rushed right through. Okay, that's the benefit because you get in really in early. I can understand if maybe someone wanted to get a bit of profit out around about that region, matching up with this white line that I've got on my chart. That would have been actually very close to the 1-to-1. Let me just measure. I just want to see what you guys are feeling psychologically. By the way, I did trade this one, 84. And okay, so this resistance region or support region would have been very close to your 1-to-1. I have to admit, I pulled something out of mine around about there, and I left the other half to go. And this morning when it opened up in here, I was pleasantly surprised. Okay, I was happy to hold this one overnight because it had non-euro bearing, even though the US portion of Safe Haven did. Okay, so if you're not in this one, I'll repeat again. What you're going to be looking for is we need some kind of a pullback, and I'm thinking it's going to be around about the 75.50 region. All right, somewhere in here, and then look for a nice price action setup, and then there's your trade, your next trade along. Okay, now any questions on that? We all clear on what our game plan is? We're all good? Fantastic. All right, let me just have a quick look, see if I can see anything else. Let me have a look at a 4-hour chart. Okay, there's nothing there. All right, so question, how long do you think it could go? Great question, Phil. Look, I reckon if we break down, this is just me, my instincts as a trader. I really like 72, 73-ish, maybe 71. If I go a bit longer and we get the right, when that interest rate kicks in over to US, we could go back to 70. Okay, we're not too far away right now, so this is when, for example, if you were trading a T chaser or a trend following system, and you're doing price action trading, everybody realizes that a lot of the trades that we take on Monday are price action type trades in hot spots or in trends. All right, I think we covered that over the last 4 weeks. They're predominantly the number one type of trade that I trade on a Monday because they're easy to spot, they're great, they seem to give a good result. If you're trading a trend chaser, that's where you can maximize on the movement. If I show you the trend chaser entry on this particular trade, you actually get an entry right here. This candle here would have been your entry. So you would have started your trade right there. Your original stop would have been there. And then now you've moved your stop to here and you're still riding. When you get your next pullback here, you're probably going to get another opportunity to move your stop along and you're going to ride it as long as you can. Now, that's with a trend chaser. For the ones that don't understand anything that I just did, I apologize. You've got to go back and watch that lesson or wait till I do it again the next time. But the advantage of the price action, let me get rid of these lines, is that with the price action, I actually got an entry here off these two candles just a little bit earlier. Let me just clean my chart up a little bit. Give me 1 second. Okay, so with my price action trade, actually, to be honest, I got an entry up here, which was there. Okay, and then I could have, yeah, sorry, up there where I've marked it right there. That's where my entry, and my T chaser gave me an entry here. Well, actually, if I'm really strict, it's on the open. The entry was down here. Okay, so see all this distance? So effectively, this trade had already virtually finished before the next trade started. All right, and then when this trade pulled back, I got another entry up here, which is still better than that one. Okay, so does that make sense to everybody? What I'm basically trying to highlight is you get different entry levels. All right. So and what I'm doing on a Monday, I'm trying really hard to trade at 2 to 1 or better. Okay, with our safety of 1 to 1, as we've spoke about over the last couple of weeks. So if I can do that effectively and I can run at about 40% success rate, it's a no-brainer. It's going to work. All right. And for those of you who have been following, I've been watching your accounts and I've seen the results. So that's great. All right. Let's move on. Euro USD. All right. Let's look at it. But I'm going to say it right now. I don't really want to trade the Euro USD. We had this channel. Okay. We were over here. Then last week we just opened outside of the channel. So it spoiled everything today. We were kind of getting something, kind of a setup to maybe go for it again. Today it opens outside of the channel again. So to be honest, I just want to leave it alone. But if I really want to force something, let me clean this up and I'll show you what I can see. Let's get rid of those old trades that we took on this. What I can see is if you focus in on my zigzag indicator, you should be able to see it straight away. Okay. Now we're waiting. This could still project down, but if this level was to hold and it starts to project up, okay, if it starts to project up, then you'll see that I've got my zigzags dropping down and dropping down, which instantly means I start to look for like a converging triangle. So let me just zoom a little bit so I can see it a bit better. Let me get rid of these parallel lines. Okay, can we all see it? Now, having found it, I'm reluctant to trade it. I'm a little bit worried about the euro. So if you feel that way, then just walk away from it, okay? But that's a nice pattern, all right? So if I was going to trade it and I saw a really good setup here, an inside candle, I'll attempt to trade it up, okay? But probably what's more likely is you might just see one candle go down like this, All right, and it's going to be so, and then the entry is going to be there, and then you're going to say, well, look, there's nothing left in it because look, it's already taken up all that profit. All right, so sorry I can't do more on euro pairs this week. It's just what the market is showing us. So I'm not here to force a trade. I'm here to analyze what's available and what the best probabilities are for us. Okay, let's move on. GBP USD. All right, this is the best tradable pair, I think. It's trending really nice. Look at that. That is a sensational looking channel. I love that. That looks so nice. So obviously this is my hotspot. I'm waiting for it to come into there to hit that. The other thing, the other thing that I want you to look out for and not discard. All right. So don't just because we're in a channel. If we get a good setup here off a nice pullback, don't be afraid to take this trade there. Okay. All right, so even though I'm showing you a channel, it doesn't mean it has to reach the other end. Okay, it looks to me like we're in a bit of an uptrend. It's pulled back. If I get a kicker there, I would be okay to trade that. Now let me show. Let's zoom in. So for example, let me draw two candles on here just so that you can see. Let's pretend that this candle today finishes like that, and I'll color it in so we can see that it's a positive one. And tomorrow's candle finishes like this. We get a fractal there. Then on the third day, if I get a break through there, I will trade that. Okay, I will not hesitate. That is a super good trade setup. All right. Now the protection is that if I break on the downside, well then I cancel the order out, so I don't get involved, and then that would basically open up the path for to look for the trade over here. All right. So because I'm in such a nice trend, I will look for this setup. Okay. Question here. Sorry, let me read. If I draw lines that look like a rising wedge, okay, possibly. Give me 1 second. Okay. All right, that even supports what I just said even more. Okay, so what Bijan is saying, if I was to let me just clean this up so I don't confuse everybody. He's saying there is a rising wedge. Okay, so which is a really nice pattern actually as well. Either way, well, this confirms I didn't see the rising wedge, but I was already willing to take a trade here if I saw it. So now that I see this, I'm even more willing to trade it. But if this fails and it goes down, all right, typically we want it to really go down, but don't forget that other parallel line, all right, because that may be the point where you may need to take something. So let me just draw them back in quickly so that there. So that what I'm trying to say is don't forget about this hot spot here if you trade the break down. Does that make sense? What about to point out that trend? Okay. Um, I believe we're still in a trend, and I'm defining a trend as what we covered in a class a few weeks back. That I've simply got what have I got? I think I've got a 24 and a 12. Give me 1 second. Let me double check. I've got a 24 and a 12. They're both exponentials. All right. Let me zoom in. I've got a 24 EMA and I've got a 12 EMA. They're both exponential moving averages. And we define the trend that when they cross, like here, and the 24 is underneath, and the 12 is at the top, that we're in an uptrend. That's simply the way that I've defined trend. Okay? If they're the other way around, then I'm in a downtrend. And if you look at my chart right now, they're still in order. So if I get the setup that I'm looking for, I'm happy to trade that. And now that someone's pointed out a rising wedge, I'm still happy to trade that. And I'll be looking for a 2-to-1 type strategy. Someone's saying Greg's saying it's a 50% Fibonacci as well. Probably is. Yes, it is. There you go. Okay. So we're on the 50 level Fibonacci. So there's lots of good reasons to trade this, but doesn't mean trade it right now. All right. Let's still look for our price action entry. All right. So does everybody know what we're looking for on this one? We're looking for a price action setup to take us that way. Alternatively, you'll want to break down to trade it down. If you do trade it down, just be aware of where that parallel point would be to that line over there. Okay? All right, everybody's clear on that? Fantastic. Let me carry on. All right, let's have a look. Let me just, before I go, I want to just chuck those parallel lines again. Otherwise, I forget. All right, gold. Okay, this is a really, really great example. These lines that are on my chart, I have not moved them, all right, since last week. This particular line here, I had locked it in because last week over here, I had a fractal. All right, I'm pretty sure I did because otherwise I remember that this was a triangle. All right, I had a fractal and we were starting to head back up and into a tight triangle. I come back today, there is no fractal, and I could ask myself, why have I got this line over there and why do I not have this line down like that? All right, who's experienced that before? Anyone? This is the frustration about pattern trading and getting a feel for the market. Now, up until this candle here, up until that one, my line, this one here, was still good and I had no reason to want to change it up until the one that I've circled right there. Now, the one that I've circled, could this be an entry for me to sell? What do we think? What do we think? Or could this one here have been an entry to sell? What do we think? I've got 4 yeses and 1 confused or 1 difficult. Not a strong downtrend? Well, you can't really say that. This looks pretty strong to me. It's going down, it's pulled back, it's going down. It looks like a strong downtrend to me. So inside bar is not a reason. We're talking about a breakout. Okay, so when we break out, we're not looking at inside bars. Okay, it's not a method to really break out of this pattern. All right, here's the answer. Normally, when we're trying to do this kind of trade, what do I always say? I want a nice bearish candle that kind of looks like that, and then at the start of the next candle, you hit the trade. Is that not what I always say? Yes or no? Or even if we break in the upward direction, I say we want a nice looking candle, something like this. I always say that, right? Does that candle look like that? No. So then why would we want to trade that candle? The beauty of what we do is we're doing price action. Price action means that we've got to wait for the candle to finish because I'm sure that at some point this candle looked like this and it was all red and it looked really, really good and you're really excited and you go, I just want to get in, I want to get in, I'm going to miss out. Okay? But then as it turns out, if you waited for the candle to finish, when it finished, the candle ends up looking like this. Sure, it broke down, but it broke down with just a little wick. The little wick is actually more of a signal of reversal than anything else. All right, so because I didn't get the type of breaking candle that I'm looking for, I would not have traded this one. This one here looks better, but it still does not close below that point. It doesn't close below that point. So I wouldn't have traded that one either. I wouldn't have traded this one either. And then the market starts to go in the other direction. Now I have a fractal, and now all those rules that I have protected me from a trade. And what I now got to do is I've got to come back and redraw this line. Okay? And in fact, I can actually draw it over here, kind of like that, and I get a bit of a falling wedge. Is that clear? Does everybody understand how I changed the shape of what I'm trading? Because it's difficult, I understand. Pattern trading is probably the oldest form of technical trading. It's also one of the most difficult. All right, because you draw a line, you come back, and then your line looks like it's in the middle of nowhere, and you're thinking, why did I draw that line over there? So you got to look at the candles, understand how the market's behaving as you go along so that you can make the modifications that you need. All right, so there's our new pattern. And do we have anything? There's no trades there right now, so you're gonna basically wait. You may, if we go up to here, you may get something on the edge there. All right, or you may have to wait till you come back down. So it's a falling wedge. So the three preferred trades that I would look for, provided that there's enough room before I hit the other side of the trade, it's 1, 2, and 3. They're the three. Okay. When you're trying to trade the break out of the wedge, the higher probability is the one that goes against the gradient. The gradient is this way, so therefore that's the one, the break. The gradient is this way, so this trade here is not one that we're going to look at. It's got a lower probability. We all clear on this one? Alex is asking, the top line can also go to the top. Do you mean the current level here, Alex? Do you mean this? We can always go to there. Is that what you're saying? Oh, okay. Hang on. Let me zoom out a bit. Oh, Alex is saying that I can join it up to there. Okay, there you go. So it can extend back. This is just a bonus. The fact that it can do this is a little bit of a bonus for me, but I was still happy with just using these 2 points, okay, as a falling wedge. But that's just a bit of a bonus. It just tells me that it's a strong line. Okay, thanks, Alex. Well spotted. All right. So what are we saying here? We're saying we're just going to have to wait, all right, until we get a setup, our typical setups. Let's move on. Let's have a look at US yen. Okay, US yen, it's gapping all over the place. It's really, all right. Last week we drew this and we said, let's see if we can bounce inside or break out or something, and let's have a look. We get Friday, Thursday, Wednesday, Tuesday. This was the candle, Monday's candle. I thought we were going to get a break. We come out and then it comes back inside with a doji, no direction. So am I allowed to trade that one? It didn't look like the candle that I wanted, so it's a no. The very next day I get virtually the same thing, so it's a no. Then I'm saying, can I get something to go back up? I get nothing. All right. Now today the market opens underneath. I got nothing again. So it's just really knocking me around, and I'm trying to find a good trade and I can't. And now, because all of a sudden they're starting to talk about the Japanese yen is becoming a little bit of a safe haven currency, and Mr. Garuda also came out and said that he's monitoring the situation very carefully. What does that mean? He's monitoring the situation carefully. It means nothing. But anyway, in either case, he's monitoring it. So that basically means that we need to monitor it as well. Has everybody got sound problems at the moment? Okay, let me see if I can fix it. I'm just going to have to stop it and start it again. If you just give me 1 second, just click on the link again. I'll just stop it and start it again. Okay, won't be long.